Hello. Welcome to Forex Central YouTube channel. Your way to financial freedom. For more information, make sure to check our other videos in this channel. Before you continue, make sure to like, press the subscribe button, and hit the notification bell icon to receive notification updates every time we upload new videos. Claim your Forex trading course tutorial videos for free. Just press like, subscribe, and hit the notification bell. To receive your free Forex courses, please send us your email address at forexcentralofficial@gmail.com with screenshot of your visit in our YouTube channel. We will send it through your email. Thank you. Now let's go for today's video. Forex Central gives special credit to Mohsen Hassan, CEO of MTG, for sharing his expertise and knowledge in Forex trading. Your dedication and commitment to educating others are truly appreciated. We are grateful for your contribution to this Forex Foundation training course.
Short selling. So you've probably heard of that term before. What exactly is it? Short selling is something that you do when you borrow an asset that you don't have because you want to sell it in the open market because you expect its price to go down in value, and you think you'll be able to buy it back at a lower price and then give it back to its owner. So the way it works, okay, is basically, let's say you have a product here. If you think it's going to go up, well, what you do is you just buy it, and when it goes up, you just sell it and you make money. But what if you thought it was going to go down? Well, how can you sell it if you don't previously have it? Well, you can borrow it from somebody, right? So let's say you can borrow this thing from somebody and sell it on the open market. And when we do that, we call that shorting, right? And when it goes down in value, as you expect, well, you can buy it back. And when you buy it back, then you can give it back to its owner. And you would have made the proceeds in between. For example, if you sold this here at 136, and then it went down to 131, and you buy it again, you give it back to its owner, you just made the difference. You made the 5 cents difference. Let's have a simpler example here. Okay. Let's say you know that there is the iPhone 11 that's coming out in a few weeks. And you know that because the new iPhone is coming out, the price of the old iPhones is going to drop in value. Now, you don't have an iPhone, but you think you can make money because of this drop in value in the old iPhones. So what you do is you go to your friend's house. You know he has an iPhone 10. And he's sleeping. You talk to their family, you talk to their dad, you're like, hey, you know what? Can I borrow this iPhone 10? Okay. And I promise I'm going to give it back to you tomorrow. Okay. I'll bring it back tomorrow. You know, your son's not going to know about it. So you get the iPhone 10. You go online, you go to, I don't know, an online selling store, eBay or something, and you sell it there. And the price for iPhone 10s is, I don't know, $700. Okay, so you make $700. Now, the next day, in the morning early, the iPhone 11 comes out. Now, the iPhone 11 comes out, and it's the price of the iPhone 11, and it doesn't matter. It's like 14. They're super expensive now, anyways. 1,400. Now, because the iPhone 11 came out, the iPhone 10, its price dropped in value, and now the going price on eBay and all these other stores are 500. So you go back there and you buy this iPhone at $500. So initially you received $700, okay, when you sold it, and now you're buying another one, the exact same thing, for $500, right? So in the end, you have $200 and you still have the same iPhone. Right? You still have the same iPhone. So what you do is you bring back the iPhone to your friend's house and you give him back the iPhone. Now your friend's dad takes the iPhone, puts it back in his son's pocket. Your friend never knew that you borrowed it at all, and you made $200 in profit. That's how shorting works. You borrow funds from your broker. So you don't actually borrow these things from your friends. You borrow it from the broker, right? And you're able to transact and bet that something is going to go down or go up, even though you don't even have that thing, because you're borrowing it from your broker and you're able to generate money because of that. So if we look at something, again, let's just bring back our example here on USD CAD. If you bought this at, let's say here, this price, which is 1.28, when you're buying this currency, what you're actually expecting is that the base currency, in this case USD, is going to gain in value. It's going to be stronger. And because it's going to be stronger, well, it will be able to give you more Canadian dollars in the future. It's going to be worth more Canadian. So you either think that the US dollar is going to strengthen or that the Canadian dollar is going to weaken. Because if the Canadian dollar weakens, well, you would need more Canadian dollars to give you the same $1 in US. Or if the US strengthens, you're still going to need more Canadian dollars to get you $1 US. So that's when you're buying it. Now, when you're shorting it, because you can buy here and sell here, and this is, let's say, 136, this is 128. So that's 8 cents difference, which is 800 pips. It's ridiculously huge. But that would be if you're buying it. Now, if you're shorting it, well, then you're actually selling the USD and buying the CAD. So you're expecting the USD to lose in value, okay? So your base currency to lose in value, to not be as strong as it was. And because of that, it will get you back less Canadian dollars. Or you can think of it as you think that the Canadian dollar will be stronger. And because it'll be stronger, it'll get you a US dollar is going to be worth less Canadian dollars, right? Because the Canadian dollar is stronger, so that you require less of it to get $1 of US. All of this is going to make sense as you trade and you practice, but it's just an understanding of this would be buying and selling. But then if you want to bet that it's going to drop in value, you would have to short here and then buy back at a lower price. And that's really what shorting is.